Hello everybody, good morning, good afternoon, and good evening depending on where you are in this amazing world. My name is Donovan Jolly, and welcome everybody once again for another amazing video of DIY investing. For today's video, the most important thing that I could think of is talking about the bear market bottom. How much lower do we have inside of Bitcoin's consolidation? And we're going to be talking about the last week close inside of our weekly candle. This was a really important close for Bitcoin because in my opinion, it ultimately is going to dictate the direction that Bitcoin's going in the short term. Do we have one more final low, or is this the very bottom of the bear market? Can we start to dollar cost average, or at the very least start looking at this being the true cycle low? I'm going to break down everything that the charts are telling us so that everybody watching this can stay ahead of the market and make the best sound decisions for the very bottom. If you're new and just find this channel, always remember to do me a favor by leaving a like, comment, and subscribing. Make sure to hit that notification bell so you don't miss out on any of these amazing videos like the one provided for you here. Thank you guys so much for tuning in, and with that being said, let's jump right into it today. Alrighty guys, so what I was briefly talking about was last week's weekly close. And I was talking about this because I felt like it was a really important decision maker when ultimately dictating where the short term of Bitcoin was going to go. And by what I mean by weekly close is this candle right here. Now guys, what we were watching for was really how prices were going to react with the breakdown of this multi-month range. We consolidated here for about 5 months. Once FTX collapsed, we broke below that support, and this became resistance. Now, inside of our most recent couple weeks, really our last month and a half, we've been rallying back up to retest the supply, wondering, are we going to be able to reclaim this as support, or is this going to end up being proven to be too strong and we get continuation to the downside? Overall, our weekly candle opened here at about 17,000. We rallied all the way up to about the mid 1800s, only to reject and close all the way back down here to about 16,500. And so as it stands right now, there's really no other way to spin this other than this was a very obvious rejection. This was a retest of previous support now acting as resistance. This is now supply. And the fact that we got this nasty rejection tells me that this is not over, at least in the short term. I believe that this is ultimately going to see one more lower low before we can ever assume that the bear market bottom is truly in. We wanted to see this low being stitched in here as our true low, because if we were analyzing 4-year cycle timeframes, remember, you analyze from peak low of the bear market to peak low. Our last peak low was December 2018, and so that was almost exactly 4 years from our last low. And so I was watching our most recent breakdown with the FTX collapse as the potential that this could be our lowest low. Well, now that we've actually rallied up in here and rejected so obviously against this supply, that tells me that I think that that was a little bit too premature, and most likely we need a little bit more resolution inside of this downtrend before we can confirm that the bottom is in. Now, what we're going to be looking at right now is talking about prior bear markets and really analyzing when our bear market low is going to be in. Do we still need one more low, one final capitulation? If so, how is that going to stack with prior bear markets? Are we extending longer than bear markets have in years past, or is this pretty much on par with what we've seen? I think it's really important that we analyze these things because this is what helps me have a sound mind inside the market. The more that we understand how prior bear markets have played out, the more it gives us at least an idea, I should say, of how we can position ourselves going into this one as it stands now. First things first, guys. The way we analyze a bear market, or I should say the way we analyze an entire market cycle, is from peak low to peak low. Inside of our very first cycle that we ever saw, this one was only about 1,155 days, and so we only actually completed 3 years worth of a cycle. I believe the reason is simply just because there was not very much money in Bitcoin. You're looking at 500 mil market cap around this time, and probably even less than that, maybe less than $100 million in total market cap when Bitcoin was back here in 2011. So you're not going to see the same sort of cycles play out because a 4-year cycle shows maturity inside of a trend. And that's why I believe we started to sync up so identically with the 4-year cycles once Bitcoin got above about $10 billion in total market cap. And that was really here. Once Bitcoin peaked at about $1,200, That was pretty much the point in where Bitcoin had enough market cap that it pretty much proved that it's not just some fad, it's not just some gimmick, it's something that's going to stay around. And so from that point, if we analyze from the 2015 bear market bottom all the way over here to the 2018, we're looking at about 1,428 days, almost exactly 1,450 days, or 4 years. This is where we start to get into the 4-year cycle theory. Now guys, one of the big things I want you to remember, let's remove our first cycle here. Bear markets have historically lasted about 1 year in duration. From the exact cycle top to the cycle bottom of the bear market, they last about almost exactly 1 year. And if we look at this, we draw from the top to the bottom, this one was about 413 days inside of this bear market. Now if we come over here and look at the one in 2018, this one was a little bit closer, almost exactly 365 days. But, like I stated, there's going to be sometimes a little bit of a variance. You can vary up to 40, 50, 60 days, and it's not going to really change anything. And that's why we're looking at multiple data points, right? Bear markets historically have lasted about a year, but then we're also analyzing from peak low to peak low, and those last about 4 years. And so if we're looking at this same pattern to be playing out once again, where it stands today, where we're at right now, from our last bear market bottom to what I should say the lowest low, our low that we actually set here when the FTX collapse happened, that was 1,428 days. And I was talking about the potential that that could actually be the lowest point of our bear market, and it could be the bear market bottom, because the time frames are exactly the same as what we saw in the 2015 to 2018 cycle, right? We bottomed here in about January of the 12th, and then 4 years later, 1,428 days, we ended up making our next bear market bottom at 28, or I should say in 2018. And so that's what I kind of mean when I say that. There's going to be a little bit of a variance here, even though this bear market lasted, 53 days longer than your typical 4-year cycle. Even though this bear market lasted about 50 days longer than 1 year, it really didn't change anything. It's still typical, it's still on par with prior bear markets, and when we actually take time to factor in the bear market bottoms, that's where it starts to make a little bit more sense in my opinion. And so if we're looking at our most recent cycles here, let's go all the way over here to our current cycles. Our last cycle was from 2015 to 2018. That completed a 4-year trend. We're still waiting on the completion of this 4-year cycle, dating all the way back to 2018, right? When we got our bear market bottom here at 3,200, that was our last major data point. And so what we were watching for is when our next bottom is going to be. I originally was looking at the FTX collapse as our major low. Now that we've had such an obvious rejection on our weekly supply, I can't help but think that this is most likely going to resolve with one more lower low to the downside. And so if that's the case, what are we going to be looking at? Well, to be quite honest, when I look at this chart, and we zoom in over here, if we reject and fall to one more low, there really isn't another support level until about 14K, and that's just the previous high that we made here after we rallied out of our bear market bottom. So we really have about 13.8K is technically the top of that move, and I would say 13.8K all the way back down to about 10,000. That's really where we're going to be expecting to see our final capitulation take us. And that's just the most obvious level to be looking at here. I mean, we've already went back inside of previous market structure of a previous all-time high of a final cycle blow off top. That was the 20K blow off top here. The fact that we've already closed back within that previous market structure pretty much shows that, the previous all-time high wasn't necessarily that much support. And so with us rejecting off of our previous support here in a 5-month consolidation, I think it's looking pretty obvious like we're setting up for one more final capitulation here. And so I would say 13.8 all the way down to about 10K is where we would expect to see a true cycle low. And that's going to be putting us right around that 1,450-day threshold. Let's assume that, we bottom sometime here mid-January. Let's just draw a data point right here. We bottom some point mid-January. If we do that, we're going to be looking at about 1,400, almost 1,500 days exactly from our last bear market bottom. And so that's going to be the first time ever inside of any of our cycles where we've actually had an overextension of 4 years, right? If we come back here and look at the first one, this one was 3 years. Like I stated, I think the reason why was because it really was technically a low cap back in those days. This one was only 3 years. And then this one was 4 years, our first completed 4-year cycle. And this one was just barely under 4 full years, right? 1,450 days equals 4 years. This one was 1,428 days. Close enough, right? It's not always going to be exact. Now, inside of our most recent cycle, let's assume we get one more final capitulation like this. We drop all the way down, 14, 12, 10K. I don't really care exactly. And that pretty much puts us into our final data point. That would really take us to a little bit of an overextension of the 4-year cycle, but nothing really that crazy. It's nothing to, say that the whole trend's been invalidated, because it hasn't. We can see variances inside of this trend. The big thing that we need to remember here is our multiple data points to pull off of. Aside from the 4-year cycles, we know that we can analyze from peak low to peak low, and that's going to be putting us around 4 years. Well, we can also look at how long our bear markets last, right? This one was 413 days, almost a year. 2018, almost exactly 1 year, just 1 day short. And now if we're looking at where we're at today, from where we're at today, we're sitting at 406 days. If we come into mid-January, this one is going to be a little bit longer than some of our other cycles, but not much different than the length of time that it took from 2013 to the very beginning of 2015, right? And so it's not that far off. It's pretty much on par with the same things, 4 years in between the distance from the cycle low to the cycle low. On top of that, relatively close to exactly 1 year from the cycle high to the bottom of the bear market. I don't really think that there's anything that we can look at right now, or at least there's nothing inside of the charts that are telling us this is that much different than prior cycles. The big thing here is, now that we've understood this, now that we know that we're looking for our final data point inside of this trend, the big thing to understand here is our final capitulation, because that's kind of what it's looking like to me. When we rallied up here and rejected off of our previous support, that told me that, hey, there's no way that the bulls are quite in control yet. If they couldn't even regain previous support, there's no way that they're going to see the market rally up in any sort of a meaningful way after a rejection. And so even though I still think the short term of Bitcoin can bounce a little bit and there's going to be volatility there, I think that big picture, with this rejection here, I believe that we're going to most likely sell off back down to at least 13.8K, which is going to be the high that we got here in 2019. And then I would believe that most likely we're going to probably come back within our previous market structure that could take us all the way back down to $10,000. And this will, in my opinion, be the final capitulation of our bear market. And that will be really the last point before we start our next 4-year cycle, right? We only need our final low to be stitched in here. I thought that maybe that was going to be the case over here when FTX collapsed. Obviously, that wasn't the case, and with our rejection, that's what told me that, hey, I think that we're still going to get one more final capitulation before this bear market is over. One of the big things I want you guys to remember here, if we do get one more final capitulation, I think this is going to be the biggest buy opportunity that we've ever seen in crypto, right? Because if we're looking at prior bear markets, this is the first bear market that we've ever crossed back within previous market structure, right? I mean, this one right here rallied way up. Even at the very lowest point of our bear market, we were still massively above the previous highs of our last cycle. Same thing here inside of our 2017 bull run. This was the previous highs made in 2013. We rallied all the way up, and even at the very lowest point of our bear market, we were still substantially higher than the previous all-time highs of our last market structure, or cycle, I should say. With our most recent cycle, we made a big bull run, but we already crossed back within our previous all-time highs, and now it's looking like we're going to cross all the way back down to our first higher highs of the beginning of our last trend. That tells me that this is a very suppressed market cycle, and I think a lot of that has to do with the fact there's just so many catalysts, and there's so much fundamental reasoning for driving price now than ever before. Bitcoin needs the reliance, and I should say Bitcoin has to rely upon the rest of the economies more than ever before. Back in these days, there really wasn't much market cap in Bitcoin. It didn't take as much to send Bitcoin up to major valuations. Now, we need the money coming in from China. We need the money coming in from America. Anytime we ban certain cryptos, it's definitely going to hinder the long-term development of these cryptos. And so I believe now than ever before, we are really reliant upon what the rest of the world is doing. What the rest of the world is doing is still fighting COVID. We're still debating on all of the recession. We're still working with all of our rising interest rates, still trying to kind of stop that trend. And so there's a lot of different things inside of our global economy that have influenced the price of crypto. the whole reason Bitcoin made such a massive run was everything to do with the fact that they just printed so much money. I don't believe that there was actually a ton of demand going on in crypto this bull run. I think a lot of it had to do with just simply because people were speculating on all the money they were printing. So now that that's kind of over and done with, I believe that's kind of the reason why we never saw quite the same sort of parabolic rise in prior cycles. I just don't think the demand was there. I think that there was a lot of people that were fearful, all of the stuff happening with COVID and all that crap. It was just causing a lot of extra fear inside of the market. And so I believe that that's also why we're seeing this bear market specifically dragging back within previous market structure. Maybe this is a new trend that's going to continue in the next cycles. I don't really know. But I do believe that this is a bigger buy opportunity than even in years past because of that. Let's assume that, crypto ultimately gets mainstream adoption like we've always thought it would. Well, if that's going to be the case, then us sitting back within previous market structures, us sitting back at the same price levels over 5 years ago, that, in my opinion, is a huge buy opportunity because it's nothing we've seen in prior cycles. Maybe this is a trend that is just going to continue to develop. Even if it's not, I don't think that you can go wrong accumulating in this final capitulation because this is going to be stretching us into our final low of a 4-year cycle. We're going to get our final data point here. And honestly, guys, we don't know how the bottom is going to look. I don't think it's going to probably end up being something like this, probably a little bit closer to this, but we could even see something more like this where we drop and we just instantly bounce all the way back up to the upside. There's probably a lot of buyers that are going to be looking to step in here anywhere from 12 to 14, even down to 10K for Bitcoin. And so I wouldn't be surprised if we do get this final sell-off, and this sell-off gets bought up much quicker than any of the prior bear markets we've seen. The only comparable one, in my opinion, is dating us back to 2018 when we spent about 3 months here before rallying all the way back up to $14,000, $15,000, right? And so inside of this bear market, I'm not really expecting that we're going to just kind of round out and accumulate for a long time. I honestly think that any capitulation that takes us back down 14 to 10K, I think that that dip's going to get bought up relatively quickly. And we might end up doing something like this, right? Where we rally all the way back up to pretty much where we got rejected from, around 18,500. We kind of consolidate sideways for a couple months. And it might be spring of 2023 or early summer before we start to get the next move back up to the upside. I'm just saying these things. I don't know exactly what's going to happen, but the big thing we need to remember is we're still looking for one more final data point. Our rejection here told me that the bear market isn't over, and with this final data point, I'm not expecting another one of these. It would probably be a little bit closer to 2018, but I'm kind of watching for something like this. And so all we can really do is buy the dip if it comes. If you don't have any money, just hold what you've got. Like I've stated, if you're somebody that's scared right now, look at the big picture. We're sitting right at the major 4-year cycle timeframes, waiting for our final data point. We've sat about a year inside of this bear market, so nothing really unheard of as far as what we've seen in prior cycles. So if that doesn't give you confidence, I don't really know what will. This is what I'm watching for. So anyways, guys, thank you so much for watching. If you found value in this, leave a like, comment, and subscribe. Hit the notification bell so you don't miss out on any of these amazing videos. If you guys want to join the Discord server, download my free ebook, follow all my trades that I post. Links are in the description for that. Thank you guys so much for the support. I've been sick. My grandma's been sick. I've been in the hospital, so now I'm recovering with sickness. So yeah, that's why I've been kind of lacking in my uploads. But now I'm starting to feel a little bit better. I'm going to get back to my normal upload schedule, so you guys can expect about 4 videos this week as we get closer towards defining what is going to happen. This week's going to be really big. I want to keep you guys informed, and this is kind of what I'm watching for as far as my trading plan goes. So thank you guys so much for watching. With that being said, I'll catch you in the next one. As always, peace out.